And now looking at superannuation. Now when you first bring your historical superannuation information into your financial model via your accounting package, your historical superannuation expense is brought into your historical income statement below your salaries and wages information, and your superannuation withheld balance is brought into your historical balance sheet located within your employment payables section in your current liabilities. Now when we forecast superannuation within your financial model, this is handled on the working capital sheet, and your superannuation analysis is located at the bottom of the sheet. At the top of your superannuation analysis, you can set what the superannuation year-end month is, which is currently set to June in this example. This month determines a 12-month cycle over which the assessment periods for superannuation are based on. In this example, as our superannuation year-end is set to June, our 2023 superannuation year begins in the first forecast period of July 22. As we have set the assessment frequency to quarterly for this year, we can see in our assessments analysis down below that we have quarterly assessments within the superannuation year for 2023. If I were to change the assessment frequency for 2023 from quarterly over to, say, semi-annual, you can see our assessments analysis is updated with semi-annual assessments taking place now for 2023. And I'll set this back to quarterly for consistency. Below our year-end drop-down, we also have our opening superannuation assumptions. This is bringing through our opening superannuation withheld balance from our historical balance sheet for the month of June 22. Our superannuation withheld payment delay assumption here determines when the business will pay this opening balance, with the payment delay currently set to 1 month. If I scroll down slightly in our analysis, we can see we have our opening balance of 42.4 being brought through, and that is consequently being paid in the opening forecast month of July 22 down below here. If I were to update this to assume a 2-month delay, by updating the assumption from 1 to 2, we can then see that the opening balance will be paid in 2 months' time, being August 22. Now when we're forecasting our superannuation expense, the main assumption here is our superannuation rate, which is currently set to 10%, as our example business here is an Australian business. The way we calculate superannuation is applying our superannuation rate to the monthly salaries and wages expense. Looking down below in our assessments analysis, we can see that for the month of July 22, we have a salaries and wages expense of 142.0. Applying our 10% superannuation rate, we can see that we're calculating superannuation withheld during the period of 14.2. As we have the same monthly salaries and wages expense being 142.0 for the months of July, August and September, we can see that we have a superannuation payable balance of 42.6 for the September 22 quarter. Our forecast payment delay assumption above is currently set to 1 month. This means that our superannuation payable balance will be paid 1 month after the assessment occurs. Looking back in our assessments analysis, we can see that we're calculating our 42.6 payable balance in the September 22 month, and then this is consequently paid 1 month later in October 22. This information is also summarized at the bottom of our superannuation analysis, showing all key data points to consider. This shows our opening balance, the calculated superannuation expense for the month being withheld, and our quarterly repayments of superannuation following 1 month after our assessment. Looking at October 22, we can see our 42.6 being paid out, which reflects the 42.6 being calculated 1 month prior as part of our quarterly superannuation assessment. A key point to note when looking at our closing superannuation withheld balance each month is that this never goes down to zero. Looking at the October 22 month, we had an opening balance of 42.6, which was then consequently paid out in the same month. However, during the October 22 month, we then accrued an additional 14.2 of superannuation expense from that month's salaries and wages expense also. This is why we have a closing balance of 14.2, increasing every 3 months before then being paid down in a fourth. This mechanic is currently referred to as a sawtooth, reflecting the build-up and release of a balance over time. When looking at the financial statement impacts of superannuation, superannuation is an expense on the income statement. The superannuation expense decreases net profit after tax and in turn decreases total equity on the balance sheet. Of this expense, the amount of superannuation paid in cash is included within the cash payments on the operating section of the cash flow statement, decreasing change in cash held. Change in cash held then decreases our cash at bank and decreases total assets. The outstanding amount of superannuation which is yet to be paid, we then account for within the superannuation withheld balance within the current liability section of the balance sheet. The decrease in assets and increase in liabilities ensures that the change in net assets matches our change in total equity and our balance sheet is balanced. To look at our financial statement impacts of superannuation within our financial model, we would expect to see our 14.2 monthly superannuation expense hitting our income statement, as well as the changes in the superannuation paid and withheld balances reflected on our balance sheet and cash flow. We can head back to our table of contents and activate our financial statements. Firstly, looking at the income statement to see our monthly superannuation expense, we can expand our net operating expenses collapse rows. Underneath our salaries and wages section, we can locate our superannuation expense, and if we scroll across our time series until we get to October 22, we can then see our 14.2 hitting the income statement. Scrolling down to the balance sheet to see our superannuation withheld balance each month, we can expand our employment payables section of the current liabilities, and we can see our superannuation withheld balance. Looking in September 22, we can see our 42.6 outstanding. This was then subsequently paid off in the October period, and our closing balance for October 22 is 14.2, reflecting the superannuation expense for October 22, which is yet to be paid in cash. Finally, scrolling down to our cash flow statement, if we expand our cash payment section, we can see our superannuation paid section. For our historical periods, we derive our superannuation paid based on the information pulled through from our historical income statement and balance sheet. If we then scroll across our time series until we get to October 22, we can then see our 42.6 being paid. Now, within a three-way financial model, superannuation affects other areas of analysis. This includes our provisions for leave entitlements such as annual leave and long service leave. This also affects our payroll tax calculations within our taxation section of our model, and our superannuation expense has implications on the tax expense of a business from a corporate taxation perspective. Now, again, these considerations will all be handled within their own videos. However, for the purposes of this video, when we're analysing the impacts of superannuation alone within a three-way financial model, superannuation is an expense on the income statement. Superannuation paid in cash is included within the cash payments on the operating section of the cash flow statement, and we then adjust for any superannuation which is yet to be paid within our superannuation withheld balance.